All right, hey everybody, TG Watkins here. Let's see if we got everything up and running. Oh, it's funny the camera's not going, but well, maybe we'll just kind of deal with that for now. All right. All right, hey everybody, TG Watkins here. I'm gonna keep the camera off because apparently that thing is not working today. Anyway, so let's see, it's January 18th, 2023, still welcoming to the new year and seeing how things are going. We're starting to see some weakness show up finally in the market. We've been kind of looking for this, figuring out, okay, when is this going to start kicking in? I had some ideas that maybe it was going to be around OPEX, which is Friday. And yeah, so it looks like today might be the day that that is starting. One of the reasons, oh, that's not working either. Okay, hang on, let's, all right. The other broadcast that I have is not working, so give me just 2 seconds. Okay, let's see. We should hopefully be up and running in the Moxie room now too. So, okay. What I was talking about is that I was looking for, we were wondering how long the market was going to keep moving up in this current trend. And, you know, we had this trend line and we had the daily 200, all that kind of stuff. We were looking for it, waiting for it. And then same thing here with the hourly chart. We were, you know, big gap here between price and the hourly 50 and just trying to say, okay, like, you know, how long is this thing going to go? Where is it going to go? And I was wondering, based on how things were just kind of just grinding up there, I was actually starting to wonder if we were going to hit the upper third ATR by Friday. You know, was this thing going to just keep pushing up by then? And that maybe Friday was going to be the day that it was going to hit it and roll over. As it looks, it appears today was the day. We could actually see that there was a double top right there today. And yeah, we just started seeing some things get weak this morning. So I exited some positions in through here. And yeah, it looks like today is kind of the day that they said, oh, we're gonna start tuckering this thing out. But right there, exact double top in the SPY today. We also had the PPI come out. You know, it was showing that inflation is coming down, but then, you know, the argument is, okay, you know, is inflation coming down because of what the Fed is doing, and that's working. They want things to come down and slow down, but then is it also coming down because the economy is slowing down? We also saw the Empire State manufacturing numbers come out yesterday. I think it was negative 32.9, if I remember correctly. It was definitely negative 30 something, and they were expecting negative 8. So that's a big difference between what the consensus was and what the reality was. So definitely seeing some slowdowns in the economy with this. As it looks like, we've been, I'll go through a few names and show you guys kind of what I've been seeing out there. We've been definitely seeing a short squeeze. So the market itself did a little bit of a short squeeze in through here. You can see, you know, price wasn't sure where things were going to go, and then it just jumped up like that. But if we look underneath the surface, a lot of names have started to move up in big ways. Let me kind of show you a couple of different examples that I've been talking to the Moxie group about. So INTC, this is Intel. And if we look here on, let's see, get the weekly chart, you know, we've been actually seeing some pretty good situations here. We've got a nice double bottom right there. We can see it actually looks like a elf shoe. You can see leg, heel, arch of the foot, ball of the foot, and then, you know, I want to see where can it go. You know, is it going to be able to get up there, up to say the weekly 50, or are we going to meander around for a while? But either way, we look at that and say, okay, there's something there. And then if we look in through here on the daily and hourly time frame, let me kind of make this a little bit bigger, right? And through there on the daily chart. And we've been watching something like this. You can see I actually put an X right here. And I was looking at this and saying, you know, this move from off the lows up like this, okay, that's great, nice solid move. But unless we were in it somewhat early, we didn't really want to be chasing it in through here because I could see that price was starting to get overbought. We could see that it had been running away from support, basically right here, that giant gap between price and the hourly 50. And we could also see that price is up here at the third ATR. and you could also see right into the previous high. So we don't want to be chasing it going long here. And so what I was looking for is a pullback, and that's what I drew the X for, is saying, hey, okay, we should see if price can get back down here someplace. Because if this is going to go bullish, then a move down here underneath the hourly 50 with the Moxie indicator above zero should be a trampoline move. And then I would also want to see if price coming into, say, the daily 21 and the daily 50 is going to be support, and if there can be another move after this. So that was the pullback that we're looking for. It'll still continue. There's still more time for it. And then I look over at Scott's Miracle Grow, SMG, kind of a cannabis-related name, as it turns out nowadays. And, this one too, basically the same situation. And it's interesting to see how some names are rolling over sooner and some are not. But we look here and we see the same condition. Notice how back here price was pretty far away from the hourly 50. So I said, okay, we need to let this thing breathe and let's wait for it to pull back a little bit. Now this one did actually kind of pull into the hourly 50 and decided to continue to move up, whereas Intel came down and then down like that. And then what we can also see is we are still outside of the daily third ATR. We have a gap between price and the 8 EMA. We have another gap between price and the 8 EMA, and I would expect price to pull back to, say, the daily 21, the daily 50, something like that. And we can say, just like Intel, notice here, coming into previous high, double top type area. So, given that the market is overbought and extended and expecting a pullback, if we wanted to kind of take some quick little shots, there might be some shorting opportunity in something like this, where this is showing very, very high, very extended, and that there might be a decent move, let's say, down to about maybe here. I think that could be an easy thing. That could be a 10%. So it could be an easy 10% down there. And so that is some stuff that we're now looking into. So SMG on that one. And then, we've been watching, say, the TLT. We're trying to look at some internals in through here. So the TLT, bonds, interest rates, all that kind of stuff. And if the TLT generally follows the market follows the TLT. And so what I've been seeing in here is that we had a pretty nice pullback to the daily 50. That's great. Good job. But now what is it doing? Now it's doing the same thing that Intel is doing, the same thing SMG is doing. What is it? Coming up into the third ATR, getting a little extended, coming up into the previous top, so that looks like a double top area. And in this case, we are also running up into, say, the daily 200. So not necessarily, we don't know yet if this is like going to be the ultimate high and we're just going to roll over like that. But we could maybe do some ebbing and flowing in through here. So we just kind of need to be prepared that some of this is going to be weak and choppy for now. Let's see, some of the other stuff that I've been looking at, GLD, yes, pretty big move up here, but definitely getting to a spot where I don't want to chase this. This is kind of the name of the game right now, is not wanting to chase these things. And you can see here, we are way up there, very similar to something like that. So, even if this is going to go higher later, this is not the place to get long up in here. And you can see prices up outside of that third ATR, off the 8 EMA and all that kind of stuff. So yeah, not the greatest place to be getting long. And in fact, if you are a long gold, might be a good place to kind of cash in some of your chips, tighten up your stops, anything else like that. And then let's see, even GDX, looking at that, same thing. I like to put some lines and markers on here as placeholders, saying like, paper trade. If I was going to do something, how about right here? And you can see right here, price running up into the third ATR, same situation. And you could say even overall, if I drew that better, like we have some negative divergence compared to price moving up. We could even see here on the, say, daily chart, we have price up and we have a level right there. So we're starting to see some negative divergence. So I got a couple more things we can run through, but let me know if you guys have any questions or any tickers that you're wondering about and looking around out at there. And with that, we're going to just kind of take a look and see if we can kind of make heads or tails of some of these things. I know Netflix has earnings today or tomorrow, so don't worry about asking about that, because anything can happen on earnings and there's no sense doing any kind of like technical analysis review on something like that. If we look at SOXX as another indication of how this market is looking, we had a pretty good situation. I've been talking about this for a few weeks, but where we've had this channel in through here, doing pretty well, following that channel all the way down, and then what happened? It broke up outside of that channel, and then what I like to see, same thing with moving averages, is you want to see price get up and over a moving average, and then you want to see price come back down to test that moving average. Well, right there, came back down, and you cross over that moving average, then you pull back into that moving average right there. It tested it, and it shot up. So that's great. There were some trades available there, but at this point, look at where the semis are. Where are they? Number one, they're up here at the third ATR. That's why I was kind of looking at the SPY and wondering if the SPY was going to be able to make it up towards the to its third ATR. And you can see here, right up into its previous high, that kind of thing. So double top and just natural resistance, kind of like a game of whack-a-mole. You got to ask yourself, like, okay, so if this is the surface, who's going to be coming up here and be like, yes, I'm gonna raise my hand and I want to be buying the new breakout. That is something to be asking yourself right in through there. And then on the hourly chart and the 15-minute chart, again, we have this big gap right in through here. So big gap right in through there, showing you that at some point price is going to want to come back down and find support at the hourly 50 or even go below it. And on the 15-minute time frame, here's where the Moxie indicator is looking pretty cool. We've had price moving up. Notice the Moxie indicator moving down. And this is another thing that a new thing that we've been working on. We're going to be probably calling it like the Moxie power dots. In a way, it's essentially a squeeze for the Moxie indicator. So it's kind of telling us that when the Moxie indicators on the 15-minute time frame are getting nice and tight, and that means that they're starting to agree with each other, whichever direction that is. So, like the squeeze doesn't care what direction it's going to fire. All it's trying to tell you is that there is some consolidation before a bigger move. So the Moxie power dots are telling you that the Moxie indicators are getting pretty close together, and whatever direction that happens to be tells you that some strength is most likely building in that direction. So we are starting to see here that they're starting to fire. The Moxie indicator is below zero. They're starting to get real nice and tight, and they're doing it in a negative divergent sort of way. So yeah, right in through here, I would be expecting generally some pullbacks, some weakness, all that kind of stuff. Now the question is, where are these pullbacks going to go? And is this going to continue? And I do not know that answer yet, but what I could be fairly certain of is I would imagine that the pullbacks, I would be looking for daily 21. I think the daily 21 EMA would probably be a reasonable target ultimately for where price is going to go. And then really the question is the daily 21 going to hold support? And do we see more strength after that? Is this going to be a pullback into strength and move up? Or is it going to be like a bounce? Do we have price come back down to the 21? Maybe we bounce a little bit, and then do we roll over again? So that's going to be the challenging thing, because it would be great to see this continue to stay strong. I've been looking at some of the internals, and let's see, copy that. And we've been looking at things like this, where, let's see, we want the 50, the 200. That internally, there has actually been quite a bit of strength in the market recently. So one of the things I like to look at, this is the number of stocks over their 200-day SMA inside of the SPY. And if we notice here, there is a double bottom. And we had some positive divergence too. And that kind of kicked off this big move. And then what we can see is that here we have more stocks over their 200-day SMA. And mathematically, the 200-day SMA is the same as the monthly 10 SMA, roughly. We have more stocks over these moving averages compared to here, which was August. So internally, the market is stronger than what it was in August, and the SPY was higher in August. So the SPY, was up here compared to the SPY now, which is down here. So we have a positive divergence as far as the internals, as far as breadth goes. And so this is why I find this interesting to see, is this going to continue? Is this pullback that we have been expecting with the SPY going to be different? Are we actually seeing that the internals are saying, no, actually we're kind of done going down for a while and we want to move up? So we look at that, and then if we go back to the SPY, I did want to show you that the Moxie indicator, we are seeing some differences. This is a trampoline move, price below the 50, but the Moxie indicator above zero. Of course, that can change later. The Moxie indicator is really just a momentum-based indicator. So, If we can see momentum now, okay, cool. But if that means that later we roll over and die, hey, that's also a possibility too, because just for right now, the momentum indicator is saying positive. So it would be great and interesting to see if we actually start making some newer highs, not like new highs, but like if we start actually getting up there. Because if we look underneath the surface, like I was talking about breadth and number of stocks over their 200-day SMA, the internals are kind of saying like, hey, there's some strength. There's some across the board strength, more strength that we see now than we even saw in August, and that more names are participating. And then if I kind of look over here, let's come over to the monthly weekly. I was kind of messing around with some Fibonacci's over the weekend, and I was like, gee, I wonder how deep this pullback has been that we've gotten. And so I started at the bottom of the COVID lows to the top of the market, and look at this perfectly. October 13th, the SPY pulled back. It's been in this bear downtrend, and it perfectly hit the 50% retracement on this pullback. So, it makes sense that we could be getting some support there and get a bounce. I wonder how far we can actually keep going. And if we look at the NASDAQ, basically seeing the same thing. It was deeper. We know it's weaker, of course, but look at the number. It did a perfect Fibonacci retracement, 61.8. So very, very fascinating, very interesting to see this. And so I'm just wondering if the market maybe says, yeah, enough damage has kind of been done. And then, I guess the other side of that is that if the market sees this and is starting to move up and is looking strong, then, what's the narrative? Well, the narrative might be that the market is calling the bluff of the Fed. Basically, hey, the economy's coming down. The stock market has already crashed, essentially, because if we look at names like Pinterest and Etsy, I mean, all these names have just gotten demolished. We know this. And that, the market's already saying, hey, we've already done enough. We're cool, we're good. And that they're saying that the Fed might actually end up, not necessarily easing, but pausing, and then trying to, do easier monetary policy before their hawkish stance has been saying. So that's just kind of the narrative. Like, if the market is saying that it's done, then the market's going to be dictating kind of what it thinks compared to the Fed. And, the Fed's definitely talking tough right now, but they could say, oh, okay, well, things have already happened. There is a rapid decline in the economy, and we need to back off on what we've been doing. So I'm wondering if the market is starting to suss that out. And if we look here, here's a double bottom right in through there. And so if this double bottom on the NASDAQ, which has been the weakest of the names, can hold, then there could be some catch up. We could actually start seeing some more strength coming into the market like that. And then if we look at the IWM, it also had a pretty close Fibonacci level. It was dancing around the 50% retracement. And as I said, if we look at the IWM, check this out, double bottom, and now we're making a higher low. And what I was talking to the Moxie group about is that we do now have price up over the weekly 50. So notice before got rejected. So this is something different. Now, will it persist? That's the $64,000 question. This is what we're trying to figure out is this the start of something new, or is this really just a trap? And it's the pullbacks. Pullbacks are going to be what tells us if this is going to work or not. So we'll be keeping an eye on that. It does look as though the market is kind of saying, hey, we're good. We've got enough destruction. We've done enough. We look at the internals. We just kind of look around, and the market seems to say, yeah, we've had enough. As part of that, we've seen the dollar come down. So the dollar is definitely down, and that is going to be making it easier for equities. Now, it could be argued that maybe the dollar has fallen a little bit too far right now, and maybe we're going to get a bounce. So a little bit of a bounce up like that here at the third ATR, kind of like what we see here. You can see price came down at third ATR, bounced up to about the 21 EMA. We could do the same thing here. Could bounce up to the 21 EMA on the weekly time frame. So if it bounced, that could put a little bit of pressure on equities. So we'll have to keep an eye on that and see if is it really just going to be a bounce? Is it just a bounce and a downtrend? So bounce and a downtrend. And if that's the case, then yes, it should bode well for equities, and maybe we continue to see the market moving up. As I was saying about TLT earlier, but let me look at the TNX because there's some path discussion here. Not saying that the TNX is going to, come all the way back down like this. Of course not. It's just not going to do that. But the whole tightening cycle might be done for now. That's kind of what we're trying to figure out. The market's trying to figure it out too. The market is usually ahead of the Fed. And so this is the narrative, like this is the explanation basically of, oh, okay, why is the market doing what it's doing, even though the Fed is still talking tough and still hawkish? Well, the reason might be because the market can already see this. The market can already see that the economy is slowing down. Look at the Empire manufacturing numbers coming in. The market can already see that so many stocks out there have just gotten hit. They've all been not all, but like they've been repriced. A lot of the froth has been taken out of the market. We've seen Tesla come down, Meta's gone down, Netflix has gone down, and so some of the bigger names are still holding up. We're looking at Apple, Google, Microsoft, but they've all been written down. They've all been discounted a bit, and so the market's trying to say, is this enough? And so, again, not saying that the TNX is going to come down like this, but what if the TNX just kind of comes down here, holds, and just kind of fades a little bit, and stays around there for a while. And then maybe a little bit later starts to break back down. If that happens, then this should lead the way for what the Fed is probably going to end up doing, because the Fed still says they're going to be raising rates. Okay. But what if they don't raise them to their full extent? Like they're talking about, oh, we're going to raise rates to 5.5%. Well, what if they don't? What if they raise to 5 and say we're done? So they're talking the market down. They're jawboning the market, and they're trying to say, hey, we're still going to raise rates. We're still going to talk tough, and we're still going to walk the line, and we're gonna get it up to 5.5. Well, the market kind of seems might be indicating otherwise. Saying, hey, I think we're good enough. And so that's kind of the thought. Now I know that leads us into the whole inflation question. That, hey, how can the Fed be doing this? How can the Fed even think about turning tail or pivoting, as everybody talks about? Like, how can the Fed even think about pausing interest rates before inflation is figured out and solved and before they've reached their max target? Well, so maybe we don't solve inflation on this go around. We help it, we definitely get it down, but what if we don't actually get it under control? And that just might be the case. Maybe we're in the 70s again. And remember, if we come over here, this is what the 70s looks like. Now, I have no idea. We have no idea if this is how the market is going to work. But what I can tell you is through the 70s, there was, let me get my different color. There we go. Here was a bear market. Maybe you can call it a correction, but bear market. And then look, we had a bull market. Then we had a bear market, bull market, bear market, bull market, a little bit of a bull or a bear, and then bull, bear. So just be aware that the market can do whatever it wants to do. And if the market doesn't, from where we are today, wherever we are today, if the market just doesn't roll over and die like 2008, if it doesn't do that and it starts to actually move up, don't fight it. We need to understand there might be other reasons. And just because it doesn't roll over and die now doesn't mean it can't later. So, if we're in this situation and we had enough of a dip and we start to move up and you're pulling your hair out, you're like, why are we going up? The economy is in the tank, or all this stuff. What's happening? Well, it could always catch up to us later. And then we could roll over, and what you'll notice is it actually made a new low. Okay, so that could be possible. It could happen later. And then again, maybe they go through another tightening cycle and all that kind of stuff, and then whatever, and they say, okay, we've got it, we're good, and the market moves up again. You're like, no, we still haven't figured it out. Well, then, then we could get another one. And look at this. What happened? Yet another new low. Okay? So anything's possible. We need to make sure that, these things can kind of change and ebb and flow. So if the market does decide to move up, even though we're like, how can it be doing this based on what the economy is doing? It's possible. Okay? It is just possible. Now, if the market does decide to continue moving down, then, be prepared for that too. We could be in 2000. We could be in 2008. Well, we'll just have to see how things go. In fact, anyway, I don't have it up here, but if you look at 2002, around March, April, the market went sideways for, I think a good 6 months or something before finally moving lower. So that's possible too. And we just need to kind of follow the market, see what's going on, and seeing how well we can follow this whole thing. So, all right, guys. Well, I'm going to be wrapping it up with you there. If you have any questions or kind of like the way that I explain things about the market, come over to your profitpilot.com. Check that out. For anybody else in the Moxie room, I'm going to be over in the options room and in Moxie in about 35 minutes. So, we'll be able to talk more and a little bit more in depth there. And we'll see you then. Take care.